A very good afternoon to all our viewers and welcome to this live coverage on the special trading session that we had this Saturday, two of them in fact. And where we did see in the first session, there was those thin volumes, of course, and the second session as well, seeing, barely little much changing with both the sensex and the Nifty. In fact, the sessions were put in place so that NSE could go on to evaluate the exchange's disaster preparedness in the event of any kind of major disruptions, and which is why we are seeing this special session. In fact, the last one was held on March 2nd of this year itself, and there have just been 3 of such sessions, special sessions before. But what we did see, the indices remaining quite in that tight range, we would say. Stock specific action that we saw, be it HAL that hit new 52-week highs, or the likes of a Nestle or reacting to its earnings. You also had something like Bandhan Bank that, there are brokerages that have come out with their reports on it. So we'll be discussing all of those stocks for now. But if to get you where we stand, it seems like the road is pretty clear now for Nifty to get into that previous highs that it hit of 22,794. We did close today's session at 22,502. So above that 500 mark is what we were hoping that we'd close, and that's what we've attained. The Sensex too closing comfortably above that 74,000 levels, in fact 74,005 to be precise. So that's where we stand. Technical indicators showing that there is more positive bias in the market, and of course there has been robust FII buying, we would say, at least that has come back from the last session that we are seeing. The FIIs have shown some bit of a new renewed momentum, we would say, into the Indian markets, and we are seeing that kind of buying come back, and which is why we saw a positive session, we would say, albeit it was the volumes being quite slim. Let's discuss all of this and more on how this special trading session really turned out and the stocks that we can be watching out for going ahead. And joining me for that is Aamar Singh. He's the Senior Vice President at Angelone. Good afternoon, Aamar. Always good to speak with you. Well, these special sessions are now becoming regular, but the volumes still remain quite thin. Now, for a session like today, where we were hoping that we are going to see, the Nifty having that positive bias, maintaining that, and of course staying above that 22,500 levels. How can we take this forward when we come back on Tuesday? Because we are going to, go back, have one phase of election that will transpire on Monday, and which is why markets are closed. But come Tuesday, what is the takeaway from today's session that we are going to get for at least the Nifty at this point?
Yeah, a very good afternoon, and thank you for having me on the show. If you look at the major indices, including Nifty, Bank Nifty, or Sensex for the matter, what we are seeing in the Nifty is that it has taken out a crucial zone of resistance. Earlier, 22,200, 300 was acting as a very strong zone of resistance. So that has been taken out very comfortably. And Nifty is trading almost at 22,500 levels. So that speaks volumes. And also, as you rightly said, that the FII selling which has stopped, and we've seen some buying coming in, so that's a positive thing. We'll have to see whether that trend sustains or not. That's the first thing. Secondly, if you look at the derivatives data for the 23rd May expiry for Nifty, we are seeing the put call ratio of 1.25. So that again is a bullish sign. So if you look at the OI data, we are seeing more of put writing that's happening. So that is again a positive indicator. And as I said, that taking out 22,200, 300 zone very easily for Nifty, that's one positive trigger definitely. And also we'll have to look out that the next level for Nifty would be around its all-time highs, that is 22,750, 800 levels. So that's going to be the next level to watch out for. Having said that, if you look at the major Nifty heavyweights, so Reliance is something again which is showing signs of positive strength. So that is something we are seeing a bounce back there. So that's something important. But HDFC Bank also we are seeing some positive movement there. So that is also supporting, because these two together would make up close to or more than 20% weightage in Nifty. So we are seeing some bounce back there as well. So that also is helping Nifty. Right. And overall, if you look at the advance decline, that is definitely in favor of the advances. So, but at the same time, I would like to add a word of caution is that though the India VIX has pulled off from its recent highs, but still it's at somewhere around 17, 18 levels. So that is one thing, and markets are likely to remain volatile ahead of the election results. So one needs to be slightly cautious.
Absolutely, one needs to be cautious, but one part of the market that is still showing exuberance is the mid caps. Now we've seen new highs, record highs there at the Nifty mid cap as well. It was even the BSE mid cap was hovering just few points away from that, hitting new highs. So do you think that party in the mid cap or the broader space is still where all of perhaps the money is really getting parked in even now?
See, if you look at the overall market structure, yeah, the mid cap did witness some correction, even the small cap had witnessed correction. But now we are seeing the mid cap again pulling up very sharply. And yes, this is a positive sign, I would say, because if you have only few concentrated stocks rallying, but if you see across the board, be it the metals, be it the auto, be it the not banks to a very great extent, but other sectors as well, where you are seeing some sort of upside move. So that brings confidence, but at the same time, we need to remember that we'll have to be more stock specific rather than being across the board, because many of the stocks are definitely trading at higher valuations where the risk reward ratio might not be favorable. But overall, the structure of the markets remains positive. If you look at the index, for example, Nifty, we are seeing some consolidation, but the long-term trend remains positive there as well.
Let's talk about a couple of stocks today. Of course, the highlight was HAL. Now this they've come out with results. We're seeing profits of about 4,309, which is almost a 52% increase. But moreover, we are also seeing brokerages that are very positive now on this counter. It did hit a 52-week high in this shortened session as well. But Jefferies has gone on to hike the price target. They see a 26% upside from here on. A couple of other brokerages also being quite positive on the counter. They say, in fact, Jefferies coming out to say that the company is flying high. Would you say so? And do you think, is it kind of overvalued, or one would have to wait for a correction to step in, or do you think there is still reason for one to be looking at HAL?
See, if you look at HAL, it has a dream rally. It is having a dream rally. If you look at this quarter itself, the stock is up by 42%. If you look at year till date, the stock is up by almost 70%. If you look on a monthly basis, the stock is up by 20%. So what more can an investor who's holding HAL would want? Having said that, what we see is that over the last few trading sessions, there has been significant increase in volume. And that reflects that some smart money is moved in, or a lot of stocks are changing hands at the current level. So though the structure of the stock from a long-term, intermediate-term perspective continues to remain positive, even from a short-term perspective, but entry at the current levels might be slightly, I would say, cautious. So a cautious approach would be more appropriate. But one thing is very clear, that this is one stock on any correction is a buying opportunity one should look at. And the stock now has got very strong support coming around the 4,200 levels.
Right. Another interesting counter today was Zee Entertainment. Of course, today there was a limit put of the 5% that we had to see, and which is why we did see Zee in fact touch that upper limit. It was up by almost 5%. But if you have to look at the results that Zee has posted, they have shown a profit of about 12.2 crores versus the loss of 72.9 crores. Revenue also has seen a slight uptick of 2.7%. In fact, Goldman Sachs has come out with a report and they maintain a neutral call. They're cutting the target price though to about 167 from what it was 195 earlier. Although the counter did see some great momentum in today's session, they are saying that the recovery in revenues is seen, but the margins still remain subdued. At least this is what they are saying about Zee Entertainment. How would one be looking at this particular counter? Because it has seen quite a bit of swings on the different reports that have come out, the different headlines it has made due to the merger and otherwise. But it has also been one stock that is repeatedly in that F&O ban. So how should one be really looking at Zee Entertainment?
See, if you look at Zee Entertainment, the stock has been hammered significantly. This is one of the stocks which has really underperformed, destroyed investor wealth, and there's no denying the fact. And if we go back slightly in time, so we see that the stock at a point of time in 2018 used to trade almost 620. Currently, it's around 140. Recently, it had made a low of almost 130. So this is a bounce back. I really don't see much there. The stock could rally for some reason or the other, but the structure, if you ask me, of the stock still continues to remain weak. So any pullback can happen. So the levels to watch out for, if technically, if you ask me, so 145, 155, that's the zone of resistance for the stock. The stock could rally towards those levels, but again, we could witness some selling pressure because till the time it doesn't take out the 150, 155 zone, I would say the trend would continue to remain not bearish, I would say, but more or less towards consolidating. So,
Right.
so you have to be careful in such stocks.
Right. So it is in that consolidation mode is what you're seeing with Z, and one could be cautious when they're looking at buying it. But Aamar, let's also talk about, we did slightly mention about how FIIs and there's this renewed exuberance that they're showing towards Indian equities. If I have to talk about in May alone, they have been net sellers. In May alone, but the buying has started as of 15th May. We can say just in yesterday's session, in fact, we did see them buy close to 1,617 crore, and we've not seen this kind. This is after 11 consecutive sessions that we're seeing buying starting from FII. So, in a broader sense of things, we are almost in the the end bit of the general elections as well. Just 3 other phases left to go to polls. So, do you think there is this renewed enthusiasm? Is the elections getting by one of the reasons? And what corporate earnings also have been pretty much mixed, at least in this fourth quarter. So, what would you say is giving this renewed exuberance to the FIIs?
I would say that, see, you have to understand that when they've been selling so much, so some buying also would come in because they would also be looking at not staying away from the Indian markets for very long because markets are the way they are. But at the same time, we have to remember that FIIs are the same FII would be present in almost 15, 20 countries. So they would be scouting for opportunities elsewhere also and see where they get a better risk reward ratio. So that's generally the reason why FIIs at times pull out their money or invest their money somewhere else. But overall, if you look at the long-term trend, they are here to stay. And election outcome, election results, definitely that's something that's on everyone's mind as to what exactly would be the outcome. So that could be one of the reasons they are looking at lightening the positions. But yes, it's a good step, but we'll have to see the trend because a 1 day or a 2 day isn't sufficient really. It has to be a trend, and also the quantum of funds that comes in. That also is something very important, crucial. So we'll have to watch out for that as well.
Right. In fact, let's also address a couple of other earnings that came by yesterday. There was a Bandhan Bank that came out with its earnings. Profits did tank about 93.2% to 54.6 crores. We're seeing NII growth also just of about 16%. In fact, the NPAs are down by 318 basis points. At least the gross NPAs coming at 3.84 on a QOQ basis, whereas the net NPAs are also down. But there are brokerages that have come out with reports. Macquarie has said that they maintain that neutral call with a target price of 225. They do see that navigating this never ending, there could be problems because of what we've seen with the management and the rejigs that have happened there. The profit after tax too has missed because of a large technical write-off that the company has done. They are seeing declines in the stress pool, which has been driven by these high write-offs. Slippages too have been higher than expectations, and the focus remains now on the appointment of a new CEO post. Bandhan Bank, this one again is a counter that has seen quite a bit of swings in some time. Aamar, how are you? What are the charts really saying for this one, especially after its results?
See, this again has been a wealth destroyer, just like Z. And if you ask me, the trend still remains down. We are seeing some sort of consolidation because in March of 2020, the stock had made a low of 152 and recent low was somewhere around 170. Currently, it's around 180, 82, 83. So what happens in such stocks when there is a clear-cut downtrend, you witness some pullback, but again, there is some selling pressure there. But it seems that the worst might be over for the stock as of now until unless something fresh comes up. But again, on the upside, I would say till the time the stock really doesn't breach the 200, 205 mark, I would say it's more or less consolidating in this particular stock.
Right. Aamar, finally give us the strategy that we could use, come Tuesday. What other kind of levels are we seeing for both the the Nifty as well as the bank Nifty, that one too has been seeing some bit of pressure, in fact, in the last few sessions, although you did say how few stocks that are really standing out among the banking pack, which are really helping it move forward. But come Tuesday, what should be the strategy one should use, and the levels that you would want to then help our viewers to be tracking?
See, if you ask me, if I look at, first of all, I'll talk about Nifty. So Nifty, we've definitely seen some positive movement happening this week, which is again roughly around 2% rally this week, which is positive. But again, I would say that the Nifty needs to sustain above this level. So earlier 22,200, 300 zone was there, so that's taken out. It's closed above the 500 mark. So it needs to sustain above that level. Then we can expect Nifty to rally towards. Then we could see a sharp rally towards 22,700, 800 levels also. Once 22,500 starts acting as a base, that's very important and crucial. On the downside now, 22,200, 300, that would be now become a very crucial support, because earlier if you look at Nifty had very crucial support around the 21,700, 800, from where Nifty witnessed a bounce back. Looking at the derivatives data, that also is positive for Nifty. So having said that, if you look at Bank Nifty, so Bank Nifty, first I'll talk about the derivatives data for the 22nd May expiry, weekly expiry. It's not as positive as we are seeing in terms of Nifty. It is the PCR is 0.98, whereas in the case of Nifty it was 1.25. And also if I look at Bank Nifty, I see that it has managed to reach the 48,000 level, which is definitely a positive sign. But it needs to sustain above the 48,300 level. That's something which is very important. If it sustains above that level, then we could witness a sharp rally towards 48,700, 48,800 levels. Whereas on the downside, now Bank Nifty has got good support coming around the 47,700 to 47,800 zone. So that's a support zone for Bank Nifty on the downside. If you ask me the bias is positive. We'll have to watch out how the US markets and global markets play out on Monday. Since the markets are closed on Monday.
Right, so we'll be able to take off from what we're seeing in the global markets, and we just saw, in fact, the US markets, the Dow touching that 40,000 levels, although it did retreat after that, but there is positive momentum even in the global markets as such. Aamar, just before you go, one more counter, in fact one more stock that reacted quite a bit today was Nestle. Now this, after there is news that it is reacting to, which is that the majority shareholders of Nestle India have voted against the proposed increase of royalty payouts to their Swiss parents, that is Nestle SA. So this news, I think, was also something that was expected, and after the stock split, we are seeing Nestle try to actually get into the hands of many others that it's now available to. But for the FMCG sector as a whole, after the earnings that we've seen gone by, also for most of these players, they did show some bit of improvement in their volumes. What would be your view on Nestle per se, as well as the FMCG, or would you have a pecking order for FMCG stocks at this point?
So if we first talk about Nestle, Nestle particular, it's clearly in a, I would say, trendless zone, in a no man's land to speak of, because it did witness a rally, but over the last 4 months, the stock hasn't gone anywhere. Intermediate term trend continues to remain sideways. It's been in oversold territory, and also some of the technical indicators, they point towards a consolidation. But this is a very good stock to trade. So 2,400 on the downside, that's very strong support level, whereas on the upside, 2,550, 2,560 is a key zone of resistance. So from a trading perspective, this is a good stock. I don't expect any major rally to happen in this stock. Talking about the FMCG, if you look at the FMCG stocks, so in the FMCG stocks also, we are seeing consolidation happening in most of the cases. We are seeing some profit booking happening, be it Godrej Consumer Products or the likes of Hindustan Unilever, which witnessed a sharp up move. But again, they point towards consolidation. ITC is one stock which seems to be doing something, but it needs to sustain above the 440, 445 level for any meaningful rally. Otherwise, it could also be in for consolidation between 400 and 450.
Right. So the FMCG pack is also there in consolidation mode. ITC would be a rather preferred pick, compared to a Nestle maybe, but Nestle good for trade is what Aamar is saying. Well, let me thank Aamar dear Singh for joining us this afternoon and giving us a perspective on how we should be trading come Tuesday morning. Thanks so much for giving us your time, Aamar dear Singh from Angel One there. But also to all our viewers, do come back here on Tuesday morning when we come back with opening bell, and for this long weekend, at least we'd like to tell all of our viewers from Mumbai to go out there and definitely cast your vote on a Monday, exercise your right to democracy, and that's what you need to be doing. And for everyone else, they can continue coming back to moneycontrol.com for all the updates, and all the cricket fans, you can go and enjoy today's Bengaluru versus Chennai match. So I hope you have a good time. Have a happy weekend.